Good morning, all. CamelbackTrading.org coming to you this Monday morning, July 6th, and we're looking at the market profile of the SPY ETF here on Window Trader. And first off, I hope everybody had a nice long weekend, got a chance to unwind and relax. Before we get started, a couple of things I think were interesting. First off, I read an article, and it shows you how numbers can basically be skewed to anything you want them to look at or read. And it was about the Russell and how the PE, depending on the metrics they use, somebody had him at 17.48, somebody else at 14 or 15 PE going forward. However, they do not include companies that are losing money into those numbers. Now, supposedly, and again, this is only what I read, I'm not sure what's true or not, but it looked like a very reliable source. Supposedly, they've never included companies that have lost money. But again, as opposed to what's gone on this year to previous years, I don't think that many companies in the Russell were losing money. The number so far is 50%. So half the companies in the Russell are not making money. So that PE is based on just 50% of the companies making money. And they're trying to tell you how people are looking at the PE for the Russell 2,000 stocks and how they look attractive because they're cheap. Talk about skewed numbers. Just keep that in mind. That's why what we see in front of us on a daily basis is so much more important than anything you'll see in the news or anything else. The other thing is I took a small poll over the weekend. I had about 220 or 240 respondents. What would we see first in the SPY? 337 or 287. They were both $25 away from the previous sale of 312. And a little surprisingly, 337 won out 56% to 44%. Somebody said I might be biased, and that might be true. You know how much I like that 287 number. But I also thought I didn't like the way the market closed, although that has nothing to do with this poll, because we're talking 25 points either way, which could take a while to hit either one of them. But I was a little surprised at the poll results. And based on where we're trading today, and as opposed to Friday, this is like 3 Fridays now where we've closed poorly, only to see the market on that Monday either gap higher or totally reject the price probe, which leads us to today, and we are firmly, with an hour to go prior to the opening, firmly rejecting Friday's price probe to the downside. Let's go over destinations and a game plan for this morning. So with just over an hour to go prior to the opening, I'm going to use Friday's high on both sides of the equation. And Friday's high is a weekly high of 315.70. And then it would be filling that gap. Well, in between, we have the pre-market high of 317.29, and then filling the gap at 318.22, 252-point gap from June 11th. And when we look at the daily chart, you'll see how we've gotten into this. We've picked away at this gap numerous times, just the way we picked away at the 200-day moving average numerous times. And at some point, one of those are going to give. So once again, the buyers are going to have the opportunity to finally fill this gap, which would be the second of the island reversals. Be pretty positive if the bulls are able to do that. Remember, the triple Qs had a true island top. I'm not sure how long ago, a week or two ago, and they filled that. Now, above that, we don't have anything to 319.95, which was a perfect POC, 13 wide from June 10th, and then 322.39, a daily high. For the downside, we will use Friday's high of 315.70 right now as our first destination. Actually, I'm going to be using 315.87. That's my pre-market low. So right above where the gap would get filled. Now, below that, we're going to use, we had 9 wide at 313.61, which was going to be an upside destination. It will now be a downside destination, 313.61. And then Friday's low of 311.51. So, game plan for this morning. Well, right now, with just over an hour to go, the gap is about $1.20. I don't mind a gap like that. It's fairly reasonable to say gap rules apply, right? Everything's in context. However, we are gapping higher into a gap, which has proven to be incredibly stubborn to fill. Now, I'm not saying we won't fill it. We also know how important the opening has been lately. So, although I might take a call play if we were to open somewhere around $1 higher than Friday's high, and certainly use Friday's high as my out if the gap gets filled, it won't be with the normal size I would look to do that because we're gapping into a gap. If we start one time framing up in B period, this gap's holding, then I would certainly increase my size because the odds of that gap finally getting filled from June 11th would be very good. Same on the other side. If we start one time framing down and the gap from the 11th's holding, well, the odds of this gap filling then would be good, and then I would reverse my position and most likely take a put play. But for now, if we open anywhere between 75 cents and $1.20 higher, I would look to take a call play with this gap as my out. No put play for the moment, unless, like I said, we start driving down and most likely would wait for one-time framing down to see if this gap is to get filled. Again, if you're in CamelbackTrading.org's trading voice channel room, you're going to be getting up to the second updates prior to the opening and throughout the entire trading day. And we've had a decent amount of people signing up lately. We're up to about 130 strong. I love it as it continues to grow with traders of all experiences and all ages. So, great group. Check us out. Now, let's go to the charts. So, monthly. Early in the month, we're one time framing up for 2 months. We're trying to get above March's high of 313.84, right? Until we obviously can't take out June's high until we take out March's high. And the reason I keep making March such an important point is obviously that was a 95-point month. And basically, for the last 3 months, we traded inside of it. Yes, we popped above it in June, pretty good, but only to close inside of it. So to me, we need to get acceptance above March's high. Once you do that, you'll be able to attack June's high and then the all-time high. Weekly, very impressive now again by the bulls. I said initially I was going to make it a 6-week balance. I only did 3. I said, did the bulls just stretch this 3-week balance to the upside and fail? If they did, you're going to test the bottom of it. Well, I said they needed to make a move early, Monday or Tuesday. Otherwise, things could get dicey. Well, right now, they're looking to prove that they can still have gas in the tank to take out the top of this 3-week balance. Not only do they need to take it out, they need acceptance above it. If they do, then again, you'll be able to go for June's high and then that huge gap, which is be the last thing separating the bulls from the all-time high. And then on the daily, same thing when you look at it. Right now, we're looking to gap higher. We're one time framing up 3 days right now prior to this morning. Here is that same high. We're talking about 315.64, but we had 315.70 on Friday. You'd be coming above this huge gap into the island reversal to try to finally fill it, get involved in this balance, and then move to all-time highs. We've pecked away at this gap numerous times over the past how many trading days, just like we got down to the 200, 6 or 7 trading days. At one point, this is either going to fail and go lower, or the more we get into this gap, filled and try to go higher. Well, once again, the bulls have the ball in their hands as they attempt to fill this gap. Good luck trading today. Have a great day, and we'll recap at 4 p.m.